Hello learners, welcome to our session today. I'm your instructor, CPA Arengo Frederick. So in our class today is a continuation of what we were doing earlier on. Remember in the previous class we had looked at the aspect of the cost bookkeeping in regard to double entry, what will be required to know or to have. And also we had talked of some of the accounts that we'll be maintaining. So in our class today, let us to handle a question. This illustration question will give us a wider understanding when it comes to tackling question for cost bookkeeping. And the question that we are going to handle is a question that we are going to share with you. And also remember, you can download this question. Just above the video, you see we have the PDF downloads. So you can just download the question and you can have it. So this is a question that we are going to handle. This is a question that we are going to handle. So that's the illustration question that you are going to handle. And going through that question together, we were told that Takers Limited operates a separate cost accounting and financial accounting system. The following manufacturing and trading statement has been extracted from the company's financial accounts for the quarter ended at 1st March 2018. So I'm given raw materials, we have opening stock, we have purchases. So these are in regard to what? Financial accounts. The aspect of raw materials is opening stock. Purchase will always be the same because in such a case, whatever we purchased and recorded for financial accounting, it will just be the same as for cost accounting unless we are told otherwise. Closing stock. We noted that there will be a difference in the valuation of closing stock. So closing stock for financial accounting or opening stock for financial accounting will not be the same as the one for cost accounting because of the difference in valuation, and we had talked about that one yesterday. Raw materials consumed. These are the materials that materials that were charged in production. Then I'm having direct wages. Of course, that is purely production. Production overheads. I'm given at that point to be 6,900. So this is what was charged in financial accounting. So we'll see if you're given any other element that was charged in aspect of cost. But if production overheads you're only given at that point, meaning that it's going to affect an account known as what? General ledger, to be maintained by both. So after you talk of that, talk of production cost incurred, I'm given 205,900. These are cost incurred. We aren't told if they were overhead. So this one will not affect us in cost accounting. Work in progress, the closing inventory, cost of goods produced, I'm given at that point what was charged, or rather what we have in financial accounting. Remember, the cost of goods and financial accounting could not be the same. Cost of goods produced could not be the same, or it can't be the same as with the cost accounting because of the aspect of valuation of inventory. So that one is going to change when it comes to cost accounting. I'm giving our sales value to be 440. Ideally, sales will just be the same all through. So sales, if not given, will affect the general ledger. I'm having finished goods or inventory closing, cost of goods sold, there I am. That is what we do have. Gross profit as per financial accounting, I'm given 230,000. We are told that the following information have been extracted from the cost accounts of the company. The following information has been extracted from the cost accounts of the company. So control account balances as at 1st January 2018. Raw materials I'm given at that point to be 49,500. Work in progress I'm given to be 6,100. Finished goods I'm also given to be 115,400. Additional information. What were we told in regard to additional information? Additional information in this case, this is what you are given. Additional information. So we expound it. So additional information, what was I told? I was told for additional information that the cost accountant indicated that raw materials issued during the quarter ended at 1st March 2018 amounted to 104,800. The cost accountant indicated that raw materials issued during the quarter ended at 1st March 2018 amounted to 104,800. And what was charged? What was charged, if you look at our question here, the one that was charged, we were also given at that point to be how much? We were given what was charged earlier on. We were given 104,800. So materials consumed, and what is charged is how much? The same, 104,800. So note 2, as per the cost accounts, cost of goods produced and cost of goods sold amounted to 282,500 and 212,100 respectively. What cost of goods produced and cost of goods sold? Remember that one was not the same as the one that we had under financial accounting. Cost of goods produced you are given to 11,900 and the cost of goods sold I'm given to 210,000. So clearly we can see that there is what? There is a difference. There is a difference on that. So come to note 3 where we are told raw materials lost through floods amounted to 2.4. Insurance claim for these raw materials is pending. So we had the raw materials which were lost during that period. Talk of note 4. A notional rent of 4 million per month has been charged in the cost accounts. A notional rent of 4 million per month has been charged in the cost accounts. If you can recall this concept of notional cost, we said that notional cost are the same as assumed cost, which are always charged in cost accounting but won't be charged in financial accounting. So in such a case, you'll find that a notional cost, where you are given a notional cost, it will always affect us. It will always affect us when you are charging it to production, that is in regard to work in progress, whereas the next account to be affected will be the aspect of what is known as or rather we'll be talking of a notional affecting production overheads. It will be affecting production overheads and the aspect of general ledger, because it's an expense account. So it will affect production overheads and general ledger account. Note 5. Production overheads were absorbed at the rate of 185% of direct wages. Recall, we had mentioned something to do with charge whenever when we looked at the double entry concept. At any given point, whenever we charge production, whenever we charge our production, I'll always be having two accounts to be affected. That will be work in progress account and production overheads account. So required, prepare the following control accounts in the cost ledger: raw materials, stores, work in progress, finished goods, production overheads. A statement, part B, a statement reconciling the gross profit as per the cost accounts and the gross profit as per the financial accounts. You'll find causes of this difference. Amongst them will be on the aspect of valuation of inventory, and also when it comes to such costs that probably are provided purely in financial accounting and are not in cost accounting. So these are the require that I was given for us to compute. So that question will be very simple if you can recall the double entry concept that we did earlier on in relation to these accounts. So comfortably we can identify what I was given in relation to the accounts that we need to prepare. So required, the examiner want me to prepare raw material stores, work in progress, finished goods, and production overheads. So having that comfortably, I can come and have our accounts. So number one account to prepare, what the examiner wants us to prepare. What the examiner wants us to prepare, one account. Second account, and probably the third account, and the third account. So these are the accounts that you are required to prepare. So you can draw them once. And the last account required here, we are told to prepare roughly like 4 accounts. So I'm going to have the other one to be prepared here. To be prepared here. So these are the accounts that the examiner wanted us to prepare. Number 1 account that you are required to prepare, sharing the question again, raw materials stores. So I'm having raw materials account. So talk of raw materials account. Number 2 account required, work in progress account. So work in progress account. And I'm also told to prepare finished goods account. So finished goods account. And the last one, we are told to prepare production overheads account. So I'm having production overheads account. Production overheads account. So these are the accounts that you are told to prepare. These are the accounts that you are requested to prepare. Talk of raw materials account, work in progress, finished goods, and production overheads account. So given that, where are we going to start from? So we are going to start with if I was given the opening inventories. And remember, these accounts are in regard to the cost accounting records and probably where we have the same records. So talk of raw materials. What was I given in relation to opening work, or rather opening stock? Opening inventory for raw materials, if you can share the question. You are told that control account balances as at 1st January 2018, I was given for raw material stores, which you are given how much? 49,500. And work in progress 6,100, finished goods 115,400. So these are the accounts that I'll be having as opening inventory. That is 49,000. 49,500 for raw materials, work in progress 6,100, and talk of finished goods I'm given 115,400. 115,400. 115,400. So confidently I can come and have our balance brought down. Balance brought down. For raw materials I'm given 49,500. 49,500. The same figure that I was given there, right? Talk of work in progress I'm given balance brought down. Balance brought down for work in progress I'm given 6,100. And finished goods I'm given balance brought down to be 115,400. Balance brought down I'm given 115,400. So we start from there with the opening balances that I was given: 49,500, 6,100, and 115,400. So long as I'm having these balances, first of all, we go to manufacturing account, identifying the items that these two accounts will share with each other, such as work in talk of maybe the aspect of production, or rather what was charged in production in relation to materials issued in that case. So come to our question. Identifying our accounts, we are told that I'm having raw materials consumed, and the beauty part of it is that if we look at this case whereby I was told in note 1, the cost accounts indicated that raw materials issued during the quarter ended at 1st March 2018 amounted to 104,800. 104,800. the cost account has indicated that raw materials issued during the quarter ended at 1st March 2018 amounted to 104,800. So this concept, my good student, you should recall the aspect of the double entry that you mentioned. So any materials issued, we said that at this point we are going to debit work in progress account and we are going to credit raw materials or stores control account. So in our case, we have a raw materials account. So what you are going to do, I'm going to credit raw materials account and you credit our work in progress account. So the detail here, I'll be having work in progress. What was charged? How much was charged in that case? What was charged in this case? We were given how much? 104,800. So I'll be having 104,800. Remember, our figures here are in thousands. Our figures are in thousands. Same case with our figures are in thousands. Our figures are in thousands. So having that case, 104,800. So I'm going to debit, as I've indicated, we are going to credit our raw materials, and confidently I can come and debit our work in progress. So the materials issued have come from raw materials. So the details here, I should be having what? Raw materials account. Term it as raw materials. How much? 104,800. 104,800. So I'm done with that part. Going to the next concept, going to the next component. What was I given? Going straight to what I was given here, going straight to what I was given there. I'm seeing I'm having what? After raw material consumed, I'm having direct wages. Direct wages. And if you can recall, direct wages, we noted that at any given point, if I'll be talking of our direct wages, key concern will be the double entry on that. We noted that I'm going to debit work in progress. I'm going to debit our work in progress and credit our wages in the event that I'm dealing with direct, in the event that I'm dealing with direct wages. So confidently at this point, what we'll do, we are going to debit, of course, our work in progress. So I'm having wages charged. Wages charged, I was given how much? Wages charged, I was given 4,200. So I'll be having here 4,200. I'll be having 4,200. So I'll be having 4,200. So we've debited our wages account, or rather we've debited our work in progress and credit our wages control account or wages account. So after having that case, the next component to do will be what? Production overheads. So after direct wages, I'm having what? Production overheads. So my good students, for production overheads, the accounts to be affected, I'll be having the general ledger. So I'm going to credit our general ledger and we debit our production overheads. So I'll be having my general ledger here. General ledger, a figure of how much. In that case, I was given how much? I was given a figure of 6,900. 6,900. So I was given a figure of 6,900. Meaning that in this case, for us to work it out well, I can even open our general ledger account. I can come and open our general ledger account. General ledger account. I can come and open our general ledger account. So after we have that case, 6,900 account to be affected is general ledger. So in this case, I'm going to have what? Production. Production. I should be having 6,900 being our production. I'll charge it there. The next component will be what? Just go to our question. The next component given, I'm having production overheads. We looked at it. Production cost incurred, remember this one you mentioned, it won't affect us at this point. So all these elements, I'll not consider them except for what? For sales, except for sales. So for sales, ideally, maybe if we reach there, but you can also clear it at this point. Sales, we are going to debit, of course, we are going to credit our sales account and debit our general ledger account. But whenever we reach there, it's when you're going to handle it. So after I'm done with what I was given there on top in regard to financial accounting, which shared with cost accounting, let us identify the elements that were only under cost accounting. And this is what I was given in additional information. So number 2, as per the cost accounts, cost of goods produced and cost of goods sold amounted to 222,500. Amounted to 222,500. So if I'm talking of number 1, cost of goods produced, if you can recall our double entry, to record the cost of goods produced, we noted that at this point the account to be affected, I'll be having 2 accounts to be affected, and that will be finished goods account and aspect of work in progress account. This is to record goods produced. If you can recall the double entry, to record goods produced, I'll be having 2 accounts. So in this case, we are going to debit our finished goods account and credit work in progress account and credit work in progress account. So confidently, I can come and record our data here. So I'm having our finished goods account. So I should be having my finished goods account at that point. I was given a figure of how much? I was given a figure of 222,500. I was given a figure of 222,500. So I'll be having here 222,500, whereas and the cost of goods sold amounted to 222,500, and the cost of goods sold amounted to 212,100. So in this case, we've recorded, first of all, we've recorded the 222,500, which we've come and recorded it there. Then I'm having cost of goods sold. So in the cost of goods sold, if you can remember the double entry that we noted earlier on, at this point again I'll be having 2 accounts to be affected. Cost of goods sold, I'll be having 2 accounts to be affected. So talk of cost of goods sold. Of course, in this case, I was given how much? I was given a figure of 212,100. 212,100. So I'll be having 2 accounts to be affected. That will be finished goods. So I'll be talking of finished goods account to be affected. So finished goods account to be affected, and cost of sales, that is cost of goods sold. Cost of goods talk of cost of goods sold. Cost of goods sold. Cost of goods sold. So I'll be having the 2 accounts to be affected. So finished goods and cost of goods sold. Meaning that at this point, I'm going to credit finished goods account, and you are going to debit our cost of goods sold. So this is what we'll be having. So to record that transaction, I'm going to credit our finished goods and debit our cost of goods sold. So finished goods, I should be having our cost of sales at this point. Cost of sales. And cost of sales given, I was given a figure of how much for cost of sales. For cost of sales, look at it, I was given 212,100. So I'll be having 212,100. 212,100. I'll be having 212,100. So we are done with that part. We are done with that part. 212,100. 212,100. Cost of sales 212,100. Then another account to be affected. Another account to be affected. We should be having what? We should be having cost of goods sold. So in that case, I want to cater for that. Then the next account, sorry, here we had recorded, so meaning that an element that we forgot, work in progress here, 222,500. Remember, I'd mentioned this concept of double entry. It's only that you had missed it. So be very keen with that. So work in progress. So the next account given, we are given what? The next account given here, we are told note 3, raw materials lost through floods amounted to 2.4. Insurance claim for these raw materials is pending. The claim was reflected in the cost accounts. So I'm having loss of goods affecting our raw materials. So that will be loss of goods. Loss of goods affecting raw materials. I was given how much? 2.4. 2.4. So we're done with that transaction. The next account to be affected, or the details next given. The next detail given, this is what I was given. I was told that a notional rent of 4,000 per month was charged in the cost accounts. A notional rent of 4,000 per month. Notional cost, remember we noted that it is an assumed cost. So affecting what? General ledger and what? Our production. So looking at our production, confidently, I'm going to have our general ledger account to be affected. General ledger. A notional account, a notional rate of how much? 4,000 per month. Meaning that for 3 months, because I was given January to March, for 3 months I should be having 4,000 times 12, that should give us 4,000 times 3 should give us 12. Should give us 12. So I'm going to have our 12,000 here. Very good, very good, very good. The next transaction was, which transaction? We just follow our question here. And the next transaction given in this case, the next transaction given here, we are told that we had production overheads were absorbed at the rate of 185% of direct wages. Production overheads absorbed at 185% of direct wages, So having that case, what will we be having? Charging our production. I know I'll be having 2 accounts to be affected. That is production overheads account and the aspect of work in progress account. So production, we are told that it was charged at the rate of 185% of direct wages. So 185%. Direct wages, we had wages of how much? 4,200. 4,200. So that should give us how much? That should give us 185%. So it should be having 185, 1.85 times 4,200 should give us how much? 74,370. 74,370. 74,370. 74,370. So affecting our work in progress, I'll come and have here from our production. That is what you are told. Production was charged at that much. How much were we given? 74,370. 74,370. Whereas in work in progress, you are going to record what? Production overheads, and the production, I'm going to have 74,370. So credit. So this is work in progress. Work in progress. 74,370. So that's what you're required to do. Maybe in this case, general ledger, as again you had forgotten this one here. Production. This was notional rent, 12,000. Always remember the double entry. Always remember the double entry. Always remember the double entry. So the moment I'm done with that, the other component that probably we've left out is what? I'm not seeing any other item. So look at our question clearly. Identifying if you've dealt with raw materials all. Production. I'm having purchases of raw materials. Have we recorded anywhere purchases of raw materials? Exactly. So I should be having purchases of raw materials. The one that we missed out. So I should be having purchases of raw materials either from creditors or cash. We're just given purchases. A figure of how much? 108,000. A figure of 108,000. So the moment you do have that, assuming there is no any other element that you've forgotten, you can now clearly balance that account and proceed to the next component. So balancing our accounts, what will we be having? So in our raw materials, clearing that account, just identifying our balances carried down. So we should be having how much? Closing our accounts here. We should be talking of 49,500 plus 108,000 minus 104,800 minus 2,400. I should be having my balance carried down. Therefore, I'll be having a figure of how much? 5,300. Whereas for work in progress, what should we be having? Talk of 6,100 plus 104,800 plus 4,200 plus 74,370. That should give us how much? 279,470. So it should give us 279,470. 279,470 minus 222,500 to give us our balance carried down a figure. I'm getting a figure of how much? 56,970. So I'm having 56,970 here, 56,970. So closing that completely, we should be having 279,470. Then talk of our finished goods account. The same concept will apply. Balance carried down. I should be having how much? 115,400 plus 222,500. I'm going to deduct 212,100. That should give us 125,800. So I'm having 125,800. So you are done with that up to that point, believing that you are all okay. So looking at the next component will be under our production. So production, I'm having 6,900 plus 12,000. So it should be having, meaning that the credit side is more than the debit side. So it should be having here 74,370, 74,370, 74,370. So this is where you should be very keen. So what we charged in production was 74,370. The actual I'm having 6,900, or rather the actual I'm having 6,900 plus 12,000. So what we charged to production was 74,370. The actual I'm having 72,900, summation of that, meaning that in this case we do have what? Over absorption of overheads. So I'll be having over absorption of overheads. Over absorbed overheads. Over absorbed overheads of how much? Minus 74,370. A figure 1,470. a figure of 1470 over absorption of overheads. Remember, we'll not be having the balance carried down under production overheads. In this case, what we'll be looking at is either the aspect of over or under absorption of overheads. In the event that probably we could be having the actual, if the actual was more than what was absorbed, in that case we could be having under absorption. But in this case, we've noted that what we absorbed, the 185% which were given of the direct wages, we got it to be 74,370. And the actual charged to production, we had 6,900 plus 12,000. So you noted that I'll be having over absorbed because what we charged was more than the actual, or rather what we absorbed was more than what we charged. So having that case, looking at the next question given on that, what were we told? The next component given in our question tulielezwa nini? So we are told how to prepare up to production overheads. But remember, we were required to come up with our general ledger to assist us to balance our accounts completely. So in this case, we can just clear that. We can just clear our general ledger. By putting into place components like what we've just produced here, or rather what we've charged in our cost accounting. Like number one, talk of direct wages. So direct wages, remember, we didn't have the account for that, so I'm going to have direct wages, which we had to be 40,200. In that case, we hadn't prepared our bank account, and so that's why I'm having it here, direct wages. Another component to consider, which we hadn't also prepared, is the aspect of production overheads. We've seen notional rent, we've seen. So I'm having also the component of purchases. Remember, we had recorded our purchases. But we didn't have a double entry on that. We hadn't created a purchase account. We only had it under raw materials. So I'm going to have 108,000 at that point. The next component to consider was what? These inventories, opening inventories. Opening inventories for raw materials. Opening inventories for raw materials, work in progress. Opening inventories for raw materials, work in progress, and finished goods. So this is what we will be having. Opening inventories, we are given how much? So we are given 49,500. So I'm having 49,500. We add 6,100. We add 115,400 to give us a figure of how much? 225,000. To give us a figure of 225,000. To give us a figure of 225,000. So the same case I'm going to record here. These are inventories. So inventories, 225,000. The next component to consider is we identify if I was given any form of did we have any opening balance in regard to general ledger. If we were to look at our question, you can just identify that one. If I was given na kama hatujapatiwa, we can still proceed to the next question. So balance breakdown, looking at our balance breakdown for general ledger. Were we given anywhere? We weren't given, so meaning that we can talk of another component given. We were given what? I was given sales. I hadn't taken care of our sales, so I'll have to consider our sales. I'll have to consider our sales. We'll have to consider our sales. So my sales figure given, our sales figure I was given there to be how much? 440,000. So this is what we'll be having on the debit side of, because we credited our sales account. On this other case, I'm going to debit our general ledger with how much? 440,000. 440,000. 440,000. 440,000. So if we don't have any other element given, we can comfortably proceed. So getting the balance of that, how much will we be having?